So our acquisition strategy is we work with banks and hedge funds. We have tremendous relationships. You can't call Goldman Sachs on the phone and say, hey, send me your portfolio of notes. So we've created lots of relationships that do provide us regular feed of deals that we then sort through. So we have a whole team, an analytical team. We've built our financial models, and we process literally dozens of assets every week through that financial model. Few of them rise to the top. So I'd say maybe 1 in 6 or 1 in 7 that we analyze actually makes the cut for us to even take a look at, to take a deep dive into it. And then of those, roughly 1/4 get selected for us to invest in. And then we'll do JVs or syndications with our investor pools, and returning some pretty good numbers.
With no limitations, what does your perfect day look like? What if it's possible to live like that every day? Would you wake up after 9 a.m., have perfect health, maybe fire your boss, have the money and freedom to do what you love most? The world is your oyster. Where would you be? Who would you be with? The possibilities are endless. Whether you believe it's possible for you or not, you can make more, work less, and live free. Welcome to Freedom Hack Radio, where entrepreneur, best-selling author, world traveler and adventurer Bryce Robertson and special guests crack the code on money, health, relationships, spirituality, and having fun doing what you love most. Be inspired to create your own self-designed freedom lifestyle.
Welcome back to another episode of Freedom Hack Radio. I'm your host, Bryce Robertson. And today, my friends, we have a timely topic with a very special guest, Seti Gershberg. Now, today, we're actually going to be talking about something that's very important that all of you need to hear. All of you need to be understanding where we're at in the economy, what's happening in real estate, what's happening in the stock market, and what things we should be looking at over the coming months and coming years. So, and to join us, to take a deep dive on this today is Seti Gershberg. Seti is an economist and has an MBA in international business from the Thunderbird School of Global Management. Prior to becoming a full-time real estate investor, Seti traded $1 billion pool of global debt securities for Show Inc., a hedge fund in Chicago, and then moved to the equity side of Wall Street to manage a small cap growth stock portfolio at William Blair and Company. Seti, it's an absolute pleasure to have you here on Freedom Hack Radio. Welcome.
Thanks so much, Bryce. I am looking forward to our conversation and very happy to be here. Appreciate the invitation and looking forward to a great conversation.
Beautiful. Well, mate, talking about appreciation and gratitude, that's the place I always love to start. What's giving you the most gratitude today, mate?
Well, I have to think of my daughter. I just love her. She's just phenomenal. I wake up every day and just think what a wonderful kid she turned out to be. She's studying to be a prosthodontist at a little school that some people may have heard of, Harvard. Did it all on her own. And she's got a great future. I'm very appreciative to have the love and support of just such a wonderful person in my life. So when I wake up in the morning, she's my first go-to.
Beautiful. Sounds like she may even be your reason why. Yeah.
Absolutely.
Yeah, that's awesome. Love it. Love it. Well, let's dial back the clock a little bit here. Can you please unpack for us your journey to get you where you are today, and why specifically you've chosen real estate, and even more specifically, single family homes?
Yeah, absolutely. And that's such a funny question because it was a circuitous journey, and it did occur over several continents and a number of decades. So you had mentioned earlier my school, and to date myself, that goes back quite a ways. I completed graduate school in the late 1980s, 1986 to be specific, where the country was in the middle of a recession, and it was the worst time to get your MBA because companies were not just hiring, and the ones that were hiring were not paying that great. So even though I had a couple offers after I got out of school, it took a while to do that. And I started my journey in Florida, wound up working for one of the, well, there were 8 major accounting firms back then. There's 4 now. Back then there were 8. I worked for number 9, a place called Laventhal in Horwath. They had 43,000 employees, and a ridiculous number of countries around the world and focused on, accounting for entrepreneurs. So even though they weren't part of the Big Eight, they were still pretty large. So that's where I got my background there. But I worked in the business world for a number of years. I was doing analysis back then. So when I was at grad school, what we learned was Excel. Excel was just released by Microsoft, if you can imagine, and nobody knew it. So that was the first thing I learned. And that's why Labenthal hired me. I would do Excel spreadsheet projections for nursing homes, hospitals, and hotels. And a lot of the hotels were around the Caribbean and South America. So my first part of my career was focused on business. I moved into, as you had mentioned before, trading. I wanted to trade at a hedge fund. They weren't so popular back then, and got a great opportunity in Chicago to work with this really boutique-y firm that was managing a ridiculous amount of money for the Bank of Credit and Commerce, BCCI, which ultimately crashed and burned after one of their rogue traders, Nick Leeson, in Asia, went against the company on several trades for multi-billion dollars and wiped out a massive amount of their portfolio. So that was an interesting time. I moved over to William Blair, worked in investment banking for many years. I was on the growth stock equity side, so I managed a portfolio of equities. But we did a lot of public offerings at William Blair. You know, we were involved in Starbucks, Costco, Wynn Casinos, Carnival Cruise Lines, many household brands, Barnes and Noble. A lot of the big box retailers that you see, we would take public, and they would be part of, those portfolios. And after the 2002, 2001, the turn of the century stock market bubble burst, I found myself in a situation where I did not want to be in the equity side of things. So I was going through a little bit of a life crisis there. The market turned dramatically. I lost a ridiculous amount of money. And I left investment banking and went into, I had this degree in international business, wound up working for W.W. Granger and managing their international inside sales group, and co-managed their outside sellers. So we were in about 140 countries, and we did really well there. So I worked long hours at night, and I decided to take a break. And I wound up taking 2 years going into South America, filming a couple of documentaries. I spent 2 years down there. And I came back to the States, and I said, what do I want to do? What do I want to do with my life now? I just re-energized, and I said, I want to be in business. I want to make money. I want to generate income. I want to massively increase my wealth. What do? I don't want to commute. I don't want to answer to a boss. And I certainly don't want to continue following policies of large companies that I don't necessarily agree with. So I want to get out of the corporate world. And, we're seeing a lot of that resistance now, right?
Totally.
Today. So, yeah. So I thought real estate. Let's get educated. Let's become a real estate investor. And that's how the birth of Scottsdale Real Estate Investments came in July of 2017. I hooked up with a group out here in Phoenix, and the rest is history.
That's beautiful, mate. Yeah, you've certainly got an impressive background. Love it. I want to take a whole bunch of deep dives and different angles there. But let's start off with, because you have an economy background, you've traveled the world, you've been doing business from a lot of different perspectives here in America, and also it sounds like internationally. What I'd love is to hear your opinion of where you think we're at in the macro economy in the US, and even touch on the world economy as well.
Yeah, sure. So, I don't practice as an economist, as a profession, but I do think about it all the time. And it certainly is related to real estate investing. And there's even a subsegment to that. So we watch it very closely. And what we found in the real estate space is that there is a supply and demand imbalance. There are not enough homes for people to live in. And construction of new homes has really lagged since the financial crisis of 2006, 7, and 8. In fact, our housing starts on an annual basis are roughly half of what it was back then. So we still haven't climbed out of the hole. And what that's causing right now is ridiculously high prices in the market. It's compounded by low interest rates. So as interest rates stay low, people can afford more house. So the prices keep pushing up. And then you have a migration from some of the big cities into, let's say, the suburbs or secondary cities, lower cost areas, which are really pushing up prices there. So for example, in Phoenix, where I'm based, we have a lot of people from California coming out. So someone sells a home, a very small home, for $1.5 million or $2 million in California, comes out to Arizona, and all they can find is a house. It's the right size. It's like $500,000, but a year ago that house wouldn't have sold for $400,000. So it just keeps pushing the prices up. And supply on the market has lagged. There's maybe a 30 or 40 day supply of housing on the market. And we see that that's probably going to change slightly. I don't believe there's going to be a massive influx of homes for sale. The mortgage or the forbearance programs on loans are ending. The moratorium from the government has ended at the end of this month.
That's for evictions and foreclosures, right? For evictions and foreclosures. How do you see that affecting the supply and demand? Because right now, like you say, you're in California, something's listed for like 500,000. It's probably going to go under contract for like 625 or something like that. And we're seeing madness like all over the country. How do you think the supply and demand is going to change with the eviction moratoriums and loan forbearance being lifted?
Yeah, great question. So I don't think it's going to change a lot. It will change a little. And what's going to happen is more supply will come on the market. Back in 2006, 7, and 8, during the crisis, when it hit, home values dropped. And because of that, many mortgages were underwater. So people left their homes rather than keeping them. If you're paying on a $300,000 mortgage, let's say, and the house is now worth $200,000, you don't really want it. So a lot of people left, and banks foreclosed. They were very ready to foreclose on people, and they became the enemy. They don't want to do that now. And we're in a different situation with equity being the key component of most people's house. Their home probably has equity because of all the price appreciation. That being the case, a bank coming in and foreclosing on a house that has equity in it, they really look like a bad guy. They don't want to do that. So they're pushing those loans that they don't want anymore into hedge funds. And then the hedge funds will resell them to investors like us. We buy defaulted mortgages. That's our main acquisition strategy for assets. But there's not enough to really change the imbalance. And plus we have infrastructure in place now that we didn't, where banks and financial institutions have people, resources, computer systems, all this stuff that wasn't there during the financial crisis is now in place to help homeowners stay in their homes or keep their homes through loan modifications. That wasn't in place before. So I do think that there's going to be a trickle. And I do think these crazy, bidding above the market will probably end. So people coming into a house, maybe able to buy it at the price. I don't see prices dropping anytime soon. I think the only thing that changes our economy, the two big outliers out there, are will the government recognize that inflation is real, or will they continue to insist that it's just a phenomenon of COVID and we're seeing supply-demand imbalances that will work themselves out and prices will drop? My feeling is that we will have a little inflation, but it'll be controlled. So that means just more of the same. And I imagine home prices will stay high. And I think home building, if they can figure out how to build buildings in the B+, B working force range, will be in good shape in a few years. But right now, builders can only build A buildings because of the cost of materials and labor. Mm-hmm. So that facilitates the imbalance. It doesn't help it.
Interesting. So you're thinking over the next couple of years, we're going to see house prices drop a little. There'll be a little bit of an effect from these foreclosures and all of the people that are late on rents. And then you think that things will be pretty sweet in a couple of years. Is that what you're thinking?
I don't see anything out there that's changing anything. There may be a black swan event that comes in. We could go to war with another country. COVID could, kick our ass even further, and the stock market react to it negatively. We don't know. So those are black swan events. We can't predict those. So if we're just looking from an economic perspective, I see a lot of the same.
Interesting. Yeah, there's certainly a lot of people that are behind on mortgages. I think last year we got over 10 million households, and it was also additional over 10 million households that were late on rents too. So now that that's going to come due, it'll be interesting to see how many people can get caught up. I can see on the loan side of things, people who are actually like late on their mortgages, they could do a loan modification, pull some equity out of their house, and reposition themselves. Going to be a little bit of a different story for the renters. I think it's going to be interesting to see how all of those, so of 10 million households, I'm assuming like a handful of those people will be able to catch up on rents. But also, last year, a lot of the people got taken out because the average American only has around about 3 months of rents or 3 months of living expenses saved. Sure, some of that could have been boosted a little bit with the stimulus packages and everything like that, but also that's supposed to be getting choked off now too. So it'll be interesting to see how many houses actually do come back on the market for rentals, and also how many homes actually do get foreclosed on, and see how that affects the economy. I personally think that we're probably going to have a pretty big effect from this starting in fall this year, and then really feeling the depth of that around about spring or summertime next year. But that's why we have different guests here on Freedom Hack Radio to take all the different perspectives and take all these different metrics into consideration. So I also know that you have a strong strength in the stock market. What's your predictions of where you think that's going in the next 12 to 24 months?
Yeah, that's an interesting question. And I'm not that heavily involved in the stock market. I've just really dove into real estate. I've been looking at getting into crypto, which I haven't as well. The stock market has been a steady performer since its inception, with periods of peaks and valleys. And my approach to investing in the stock market is long-term. Buy good companies, buy them on the dips, stick with them for a long time. I'm kind of a buy and hold player in that sense. And, don't overpay for stocks. That's, I'm more of a value investor. I fall more into the Warren Buffett camp these days. I used to manage this growth stock equity portfolio, but that was still buy and hold for the most part. We didn't trade a lot. We bought companies because we believed in them, and we kept them because of their business thesis.
And you're looking for the long term. So is there any particular sectors that you have been drawn towards over the years, or maybe even currently in the stock market that you like?
Artificial intelligence, biotechnology, other technologies. That seems to be the driving factors of what's going on. Us real estate investors, it's interesting. We don't see, 2,000, 5,000% return, 10,000% return that you might get in crypto. Or I remember Home Depot was a William Blair company, was taken public in 1984. And in the late 90s, early 2000s, when I was there, it was something like a 10,000% return from its IPO, something ridiculous like that. We don't see that in real estate, right? But I'm pretty happy with the returns that we get, and they're a little bit more predictable. And we get to invest in an asset. It's something, it's tangible, and it has value on its own. It has intrinsic value. So
yeah, absolutely. Love tangible assets. I'm sure we're in it for a lot of the same reasons. So, Scottsdale Real Estate Investments, how have you guys positioned yourselves so that you can handle what's coming in the next few years, and with things ever changing?
Yeah, good question. And we are positioned very well, positioned for growth. We've got a vision. We've been executing on the vision, and it's been working. The firm was founded in 2017. I brought on my business partner, Jay Tenenbaum, in January of 2018. Jay is an expert in discounted mortgages. He's a former debt collection attorney, so he knows debt collection practices, asset management, things along these lines. He's an educator, and we partnered up, and we wound up. Our first purchase was a portfolio of contract for deeds. Contract for deeds they're like mortgages, but they're like car loans. So where on a mortgage, the borrower holds the title. On a contract for deed, the company, us, the sponsor, owns the title until it's paid off, and then you provide the title. So on a house, it will work just like a car loan. You pay a loan off over 5 years, and then you get your title from the bank. Same thing, someone pays off their mortgage over, let's say, 30 years, and then you give them the title. So we bought this contract for deed portfolio. We started buying rental properties. We picked up 7 in Cleveland, and then 40 in Evansville. And then since then, we've been involved in a total of 200 real estate transactions since we started, and it's been accelerating. Our primary acquisition strategy is very unique because we buy defaulted mortgages. A lot of people do not have expertise in this area. That was the key reason for bringing Jay on board. So he's been really key in helping us understand that space and expanding. But we're able to buy, even today, assets at a tremendous discount. In fact, we just put in a bid on a property in New Salem, New York, which is an A-rated neighborhood in New York State. And we'll be paying about $550,000 for that mortgage, but the ARV on that property is about 1.3. So we still see lots of profit potential in properties like these. So our acquisition strategy is we work with banks and hedge funds. We have tremendous relationships. You can't call Goldman Sachs on the phone and say, hey, send me your portfolio of notes. So we've created lots of relationships that do provide us regular feed of deals that we then sort through. So we have a whole team, an analytical team. We've built our financial models, and we process literally dozens of assets every week through that financial model. Few of them rise to the top. So I'd say maybe 1 in 6 or 1 in 7 that we analyze actually makes the cut for us to even take a look at, to take a deep dive into it. And then of those, roughly 1/4 gets selected for us to invest in. And then we'll do JVs or syndications with our investor pools, and returning some pretty good numbers. Now, a lot of these mortgages will sell at the auction. We can do many things with them. If it's occupied, if the asset is still occupied, we can do a loan modification, which is our preferred exit strategy, because now it's cash flow and we keep the homeowner in the house. So for at least half the deals we do, we're keeping homeowners in their homes. For the ones that can't get out of their own way, we'll go to foreclosure, and at least half are sold at auction. And then of those other ones that aren't sold at auction, then we take them back, and then we can do whatever we want. So we have multiple exit strategies. We can turn it into a rental property. We can do a fix and flip. We can turn it into a short-term rental like an Airbnb. We can do a seller-financed note to an individual who, let's say, is an entrepreneur and has great income but not so great credit and can't qualify for a traditional mortgage. We can seller finance to them. We can put a renter in a property and then sell that as a seller finance turnkey rental to another investor. So we do all those sorts of things. And that ability to be diversified, to be able to build teams across the country, and to have our relationships with our hedge funds, we're getting a steady flow of assets, is very advantageous. We continue to grow. And because of all that growth, we've invested very heavily in our software platform, REI Blade, which is designed for all real estate investors who really want to scale. If you're happy with, managing one rental property, it's probably not for you. But if you're looking to build a real estate investment portfolio, then this software does things that nothing else on the market does.
Yeah, and that's, thanks for bringing that up because I was going to mention that. And, REI Blade is actually, it covers a lot of different things that software doesn't typically cover, or software covers in sections. And so you'd have to go out there and get, your property management, your asset management software, syndication and capital raising software, but you've infused everything all into one platform. So do you want to take a little bit of a deeper dive on that and talk about all the different things that you can basically cover with this software?
Yeah, absolutely. And that was great analysis. So we like to say that the software is a complete ecosystem and it covers the life cycle of a real estate investment. And what I mean by life cycle is from the very identification of an asset through the analysis, through the capital raise, through the management, and then through the ultimate sale. So REI Blade is actually a distribution platform for deals. So all these hedge fund relationships that we have, we're able to now funnel those deals onto the platform for our subscriber base to now purchase and package and market for themselves. We also have a mastermind workshop we call the Traction Workshop every Friday, where we go over the software, and we also bring a deal. So we're bringing deals, ready-made deals. These are curated deals. We've already looked through them. We've already taken a look. We know that there's profit, and we show people how to make profit with it. But this is all done through the platform. And then they can take those deals and package them up and then sell them. And then they have that asset that they can now manage in the system. They can take notes. They can make comments. Everything is there for them in one place. And their investors, because everybody gets unlimited investment portals. So anybody who you do business with will have immediate access to their financials, their comments, and the documents. And what's important about comments is that they eliminate the need for an investor like us to write quarterly reports, because the investor is constantly fed information about what's going on with their asset. So we don't have to spend 2 weeks every quarter writing out long quarterly reports and doing research. Now we could use that time for something else. So it's very helpful in those organizational tasks. And then, of course, we have multiple team members. We have about 8 team members on the platform, so teams can communicate with each other and all that.
Beautiful. That's awesome. Yeah, a lot of ways to save time. It definitely, when you've got all the investors coming in and everyone's got questions and quarterly reports, it's good to have a system to be able to automate that and save a lot of time. It can really get out of hand. Well, that's excellent. How do Freedom Hackers get their hands on this software?
Oh yeah, well, they can reach out to me. I can leave my my email and phone number in the chat. And you can disseminate that. They could also go to scottsdalerei.com. You can connect with me that way. There's a form you can fill out, or you could go to reiblade.com and go to that website. And you can, I don't think the purchase buttons are turned on. We do have a growing user base. We've got about 35 users on the platform right now. It was launched in February. And our user base are from people who have 1 or 2 assets to a fund that has 1,200 doors.
Excellent. That's excellent. So we're going to also have those links in the show notes as well, so you guys can follow up and find out more about that software. And talking more about Scottsdale real estate investments. So you guys basically have two different asset classes that you're working in. You've got your defaulted mortgages and then distressed properties. About how much of your portfolio is in each of those sections? Like, what percentages would you give?
Well, technically, we would consider buying a mortgage a distressed asset. So the asset itself does not necessarily have anything wrong with it. In fact, the one today in New Salem, New York, was in spectacular condition, move-in ready. But it's distressed because the owner hasn't paid on it for 4 years. So the stress is coming in the financial viability of the loan. So we would consider that a distressed asset. But if you're talking about properties that are in need of repair, I would say the large majority of assets that are not sold at auction are, at least in today's market, under some form of renovation, whether it's a lipstick renovation or a complete gut rehab, because that's where the market is right now.
And how do you feel coming into times where we've already seen price inflation? We saw lumber go up 4 times in the last 12 months, and then it came back down and cut in half. And, there's a lot of supply chain problems that could be happening in the future, and we could really, really be cranking up on material prices. How have you played that into your business model and your underwriting?
Yeah, great question, Bryce. So a couple things there. The first thing is that we've been blessed on the other end by assets that sell at stupid high prices. Well, above where you set them. So we're kind of in a bubble that way. So even though renovations have cost more, and they have, we've been saved by rising price appreciation, but we're not going to count on that going further. And the way we deal with it, Bryce, is by being very conservative on our financial models. And I'll give you an example of that. So when we sell an asset, we always apply 6% as our listing price and 2% for closing costs. Closing costs are never 2%, and real estate brokerage fees are usually negotiated down from 6%. It's a starting point. So it's an automatic cushion that's built into our model. We still use the more conservative number. When we collect our ARVs, our after repair values, we go with the low end of the range. So for today's asset from New Salem, New York, we put a cap of 1.2 million on it for an ARV, where I know deep down it's going to sell for more than that. Right. So when I'm doing my analysis, though, I'm doing it on that number. We also had 750,000 if we sold it as is, or $1 million in case the market turns and we sell it for less. And then we stress test it. We say, does the high-end renovation budget applied to the lower selling price still profitable? And if it is, then you're in good shape. So you just want to build your models being really conservative. And that in most cases will help you, because as we know, like stocks, not all real estate investments are winners. You just have to minimize the impact and their frequency.
Yeah, especially coming into uncertain times. We're doing the same things. If we actually think that we're going to be able to sell it for a 7 cap in 3 years, right now we've been building in to sell it at a 9 cap. And we can get interest rates on some of our mobile home parks right now in the low 3%, maybe even high 2% range. But we're still underwriting with refinances in 3 years' time at a 6% interest rate, just in case things get out of hand. I think we also doubled our construction costs on all of our projects to hedge in there for price inflation, labor inflation as well. And, we're actually seeing some pretty interesting things, not just in the construction space, but in employment all over America right now, where there's tons of people that have been on the stimmy checks and they've been getting government assistance and unemployment insurance and a lot of different programs out there. And a lot of those programs are actually going to be cut off right now. So that's going to be interesting to see how that plays out. But as a result of that, a lot of people have just been sitting at home going, yeah, this is pretty cool. I get to get paid by the government. I get to stay at home. But because of that, a lot of projects that we're working on, actually, we've even got 6 projects right here today. So forgive me if there's a little bit of background going on. But all of our contractors are having trouble finding people right now. A lot of restaurants are having trouble finding people right now. So I think we've also got to build in for higher prices for labor and higher prices for hourly rates for people, because who knows how long that's going to go on or how bad that's going to get. So I love that you're also thinking about the conservative way of underwriting. I think that's super important, especially coming into the times we're coming into. So I'm going to change gears now a little bit and talk a little bit more about freedom. So what does the ultimate freedom lifestyle look for you? I know you love to play. I know you love to ski and play tennis and travel. What does the ultimate freedom lifestyle look, smell, and taste like for you?
Yeah, I love this question. This is awesome. So Let's see. I just got back from a little bit of travel. I had mentioned my daughter earlier in the podcast, and I went to visit her up in Boston. I was up there for a week, and I took off from Phoenix, and I busted out my MacBook Pro, and I booted up REI Blade, and I'm doing business. And then I'm in Boston for a week, and visiting my daughter now turns into a business trip, because I'm able to do my business from anywhere in the world because I've got my software platform and we have our system built and our infrastructure. So I can be anywhere and do my business. And that's something I plan on doing. And I've been planning on doing this since the early 2000s. When I left William Blair, a couple of years later, I picked up a book, which all you guys and Freedom Hack Radio listeners, I'm sure you've read, which is The 4-Hour Work Week by Tim Ferriss. So what I loved about that was his discussion about income arbitrage and living in foreign countries and earning American dollars, but also enjoying the lifestyle. And I love to travel, so just seeing different cultures. So the ability to be mobile and still do what I do on the hours. So, I'm not tied to a desk. I'm not tied to a location. And I can do my job on the road. So I'm leaving for Sarasota, Florida on Saturday. I'll be there. I'll be back in New Jersey for a little bit. After that, we've got believe it or not, an elementary school reunion at a nice restaurant. And then I'll be stopping off in Philly for a moment. And then when I come back to Phoenix, I'll be planning out the next leg. And there's two things I'm going to be doing. One is going to be going up the coast of California, up to Canada on a road trip. And, I'll get some Airbnbs and I'll just be able to do this from the road. So that's what my freedom looks like. And the only thing I haven't figured out, and I'm kind of getting close, is how do I get outside of US time zones? So, if I'm on East Coast time zone, it's kind of tough. We do a lot of masterminds in our community. So Wednesday nights and Tuesday nights are mastermind nights, and they go from 7 to 9 Pacific time. And we know that's 10 to midnight East Coast. So that's rough to do that every week, but I can handle it. Now, if I went to Europe and I'm 7 hours ahead, then I'm not so sure. So that may have to involve some recordings. But for me, freedom is the ability to be mobile, travel, go places, do things, and, keep earning money.
Beautiful. I love it. I'm hearing that you are big on location freedom, which is one of the 3 of the freedom trinity. And we absolutely love that. That's awesome. It's so cool with technologies and also the software that you've built to be able to have the luxury to be able to cruise around. And you can do this from anywhere in the world, literally anywhere in the world, as long as you have internet connection, which is almost everywhere. And like you said, even if the time differences are a little bit off, you could either pre-record it, automate it, or, you could also wake up early. Sometimes I've done that, traveling all over the place, and you got to hit something across the world, do a live presentation. But the technologies that we have these days totally make it easy to have location freedom. And it's awesome. I love that. There's not really that many people that are leveraging that and using that. And that way you can do whatever you want to do, and you can be having your school reunion. It's not the whole concept of the 9 to 5. We're really trying to brainwash that out of people, that's not necessary. You don't have to have that kind of lifestyle if you set things up and create things like this for yourself. So also, you love to play, you love to ski, you love to play tennis, you love to travel. Has any of that changed for you with all of the lockdowns and anything? Is there any adjustments that you've made in any of those arenas?
Oh yeah, lots of adjustments. I mean, it's been a very difficult time for myself and for many other people. And my thoughts are with all the families of people who have lost their loved ones due to COVID. The number I saw this morning on the news was over 650,000, and it's climbing. So my heart goes out to those individuals. And the way it affected me was I went into lockdown early. I actually am a news junkie, and I was watching the virus come out of China back in November of I think it was 19, and saw it coming, and actually locked myself down before the country even locked down. And I was indoors for quite a bit. So I kind of spent Last year was very important for personal development. So I asked myself the question, well, I'm kind of stuck at home a lot. And, what am I going to do with all this time? A lot of people were pissed off and, they had hard times adjusting. I'm lucky in the way that my child is out of the home. I'm not married right now. And, so I'm focusing on my business, and I was able to do a lot of personal growth as well. So I became a meditation and yoga maniac, like just deep into it, still both. And I've studied a lot about consciousness, leaving, a mindful life. And those things are really important to, me, and having a balanced approach to work and what I'm doing. So I use the inward opportunity of being alone to work on some personal development, and it was a very, very enlightening experience.
Yeah, that's awesome. Yeah, amazing that we can tap into those too. And I'm sure you've seen some big changes from meditating and yoga, enhancing your health, enhancing your spiritual and mental health. Do you have any daily or weekly rituals that you do, not only to maintain all of the things that you've got on with business and everything like that, but to grow as well?
Yeah, absolutely. I meditate every day, several times. And it's just become part of my life. First, it was very difficult. You really resist it. But once you start doing it, if you start small, even 2-3 minute meditations and grow that, there's tremendous mental health benefits in terms of, relaxation, reduction of stress, outlook on life, ability to deal with other issues, your personal moods, all of that. So in the morning, first thing I do when I wake up is I meditate. About midday, I'll do a yoga session, and I walk. I try to target 10,000 steps a day. I've been averaging about 11,000 and change the past couple months, but it fluctuates. But all this stuff is monitored on the health app on my iPhone. So, I try to connect my health, my physical health, my mental health, and my business health in that way. So it's very ritualized. So the walking, the yoga, the meditation every day. Obviously, I work in between that, but my work is really geared toward, doing the things that need to get done to make the business grow and delegating everything else. So last year, at the beginning of the year, we had one part-time employee. Now we have 8 or 9. So we've made a big effort on hiring people to help us grow the business.
Beautiful. Working on your business, not in your business, which we're huge about here at Freedom Hack Radio. I've been having a lot of scaling growth over the last 12 months. Spent a lot of time training people, but now I'm in a position where I really don't have to work much at all. So it's really beautiful to have that scaling option there too. Talking about growth and a lot of things that you've achieved over the years, what's been one of the biggest challenges that you've faced as an entrepreneur?
Let's see. Biggest challenge is working with other people. We have lots of different personality types, especially, in real estate investing. I see that it works really well as a team sport. There are a lot of lone wolves in real estate. Certainly can be done. People working on their own, doing everything on their own, taking charge. They're the leader, they're the commander, they're in control of everything. And I think that's phenomenal, and my hat's off. But for most of us, we like doing it as a team sport, where you have multiple players involved working with you to achieve a goal. And when that's the case, when you're working on a team, you have to deal with lots of different personalities and personality types. And now we're dealing with people who are remote. So all of our part-time people are remote. They can choose their own hours. They do have certain deadlines. But I think, as a leader, understanding what motivates people, and I'm not saying this is challenging in a negative way, like it's been hard or difficult or not enjoyable. It's been very enjoyable, that whole growth of becoming a better leader and seeing the vision. My superpower is just seeing the vision over the horizon and then steering the ship toward that that goal. But on the ship, you have all these different players and you have to get them all rowing, the paddle in the same direction. So that is it's a very interesting process, because you have to look at yourself, who you are, what your personality is like. And I can be very demanding, and I can get into a mode where I mandate things. So I work on that, like bringing that back, right? And I try to find what works in individuals. And because everybody is an individual, they have different motivation factors. So learning all that and being good at it, I'd say, would be the biggest challenge.
Do you use any tools within your team to be able to figure out what different personality types are, like disc profiling or anything like that?
I haven't done anything formally, but for myself, I've done the Enneagram. So I'm, aware of those personality types. I've done Myers-Briggs in the past, when I worked at Fortune 500s. There's lots of different trainings that I've done over the years. There's the banker's code that I paid for. My business partner and I went to an entire training, and the banker's code, which divides people into 4 groups. And there are different things they do, the ways they act, the things they say, which key you in on their personality type. And then you can mold your responses to them based on the things that will motivate them. So nothing in particular for the company, but just a lot of, over the years building up experience.
Yeah, it certainly helps when you can understand other people's personalities and get out of our own mind, because the way that we need to be communicated with may not be the way that one of our other staff members needs to be communicated with. And so understanding the different approaches there totally helps. I love that. And before, you were talking about challenges not necessarily being a bad thing. I think challenges are awesome. It's an opportunity for us to be a better version of ourselves so that we can be better and have a higher capacity to be able to handle more and have a bigger growth circle, so that we can then contribute more, which as an entrepreneur, I think is super important. So I'm getting smashed with challenges all day, every day, and I actually love it. And the bigger the challenge is, the more excited I am, because I know that on the other side of that challenge is going to be some kind of amazing reward. And there's certainly been some challenges this year that have been like, this one's going to be a good one. But that's what it's like as an entrepreneur. So what scares you about the next 1 to 2 years?
Well, my biggest fear is that our supply dries up, and that's probably an unwarranted fear, right? If you were a fisherman and you always fished in the same lake, and the lake got polluted and all the fish died, you're in trouble, right? Like, you just got nothing to do. So I always worry about, what's going to happen in our space. And on the information factual side that I use to, I don't want to say console myself, but look at regularly to do a reality check, is that in a normal economy, there are about 266,000 foreclosures filed every 6 months. That's where we were right before COVID. And during COVID, it dropped quite a bit because of the moratoriums, went down to about 60,000. So that's quite a bit. Will it go back up to that level? I don't know. But for us to maintain our business in a healthy way, we need to maintain those relationships and have the availability of, to be able to source those assets that way. So that's my biggest fear.
Yeah, I think you guys are going to have a lot of opportunities there over the coming years. So flip that coin. What excites you the most about the next 1 to 2 years?
Well, I just see what we're doing. Like, our platform is really about to explode. What we really haven't talked about here is the community that Jay and I belong to, Jay Tenenbaum, my business partner at Scottsdale. We're part of a group out here in Phoenix that is now virtual. So I should say it's a global community of about 800 individuals who are members of a real estate investment community that works together to find, fund, and educate on real estate deals. And we're very active, and we have many masterminds throughout the week. And we know that our system works. So on Tuesday nights, Thursday morning, Thursday afternoon, and Friday afternoon, we are delivering curated deals to that community. So everybody's been trained or in the process of being trained how to be a real estate investor. We're bringing deals that are curated that make sense. Now, there's no guarantee, but they make sense. A lot of eyeballs have looked up at this. My analysts have looked at this. I've looked at this. We bring it to the community analyzes it together. So we're able to distribute the deals to our community in that way. And that's transferring over to REI Blade on a much larger scale. So the test market was in the community, and it's phenomenal because we're basically joint venturing or syndicating 4 to 8 deals a month, right? And that's just in our small community, right? Once we bring that on the platform, and now we have thousands of subscribers, and then we have the hedge funds feeding deals into it right away, we're able to explode, the growth of that platform. So we're expecting great things. I'm super excited about it. And I'm just jazzed to wake up one day and just, see us doing, 50 deals a day, whatever it is, 100 deals a day, whatever it is. But you said something before about, rising tide, like the boats rise, we all rise together. That's the way I look at it, because all of our subscribers are literally learning exactly what we do at Scottsdale. Like, we're just teaching people our business model, and then we're hand-holding people all the way through it, joint venturing with people so they learn it properly, and then letting them do it on their own. So, we're hopefully bringing wealth to many, many, many people, and that gets me very excited.
Beautiful. Yeah, we definitely share that. I mean, I think it's super important to be able to help and educate people and pass it on. I achieved financial freedom in 2.5 years through mobile home park investing. And I had no idea that was possible. Previous to that, I was in the construction industry for about 20 years. So once I had that achievement, like, this massive weight was lifted off my shoulders. And then I realized, oh my God, I've got to share this with people. So many people could live this amazing life of traveling over the world and doing exactly what you want when you want, by just working hard for a couple of years and setting up the right systems. And so I think education is super important, and especially with all the things that are happening with the economy, with how I believe the next few years are going to unfold. I think it's super, super important to be able to provide as much value as we can in education. And I push really hard on the financial education piece so that people can best position themselves and not only survive, but thrive in these times. And I think you're going to have an amazing opportunity to grow your platform over the next couple of years. I think being in distressed loans is definitely a good asset class to be in. I think you're going to see a lot of action in that place. So is there any golden nugget that you would like to leave? Just one golden nugget with our freedom hackers while they're on their path to financial time and location freedom and ultimate fulfillment?
Yeah, I think the first key, there's several keys, but the first key is to take action. Take action every day, all day long, never stop. Take action. People who take action succeed. There's things you need to do after that. But I mentioned this community that we have, which is just a phenomenal community. But I know there's people in there who I've known for 4 or 5 years who haven't done one real estate deal. They haven't pulled the trigger. So they're getting some sense of satisfaction of being part of a community on the social aspect of things, which may be very important for them. And that may be more important for them than doing a deal. But if you're going to be part of a community that is designed to increase your income and wealth and provides all this education and information about how to make money, then just take action. There are people there that will help you. When you jump off the cliff, 2 things are going to happen. You're going to jump onto a ledge or you're going to fly. So either way, you're good. You're jumping on the ledge as your support team. And if you work with others, they'll help you out, and you can't go wrong that way. But you got to take action to move forward. Otherwise, you're just going to stay in the same place.
Yeah, I totally agree, man. And even if you don't even know any of the next steps, if you just take that first step, then once you get to that step, you can go, okay, what's the next step? And then just do it like that. That's how I did my first mobile home park deal. I had no idea how I was going to pull it all together. I just knew I had to get it under contract. And once I got it on contract, I had to do my due diligence and inspections. And then once I did that, I had to raise capital and pull it all together. If I had have sat back and thought, how am I going to do it all? I would have been like all of the people that were around me, even my mentor that I dropped 30 grand on at the time, telling me, Bryce, you're never going to do it. It's not going to be possible. Just, you're dreaming, kiddo. just come back down and do some smaller deals. But if I had have done that, I wouldn't have been where I am today. And so I totally think that all of us need to just take massive action. Hopefully this episode has inspired our freedom hackers to go out there and pursue your dreams more, take that next action step. And if you're sitting at home on the couch on unemployment insurance, get your ass off the couch and go out there, because having that kind of position and that kind of mentality is you're not going to win in the long run at all. And either is our economy either. And that's going to come back and you're going to be hitting it the worst. So make sure that you're taking massive action. Go out there. Hopefully this has inspired you a little bit more. There's tons of opportunity in the real estate space. So go out there and get cracking. So how do freedom hackers keep the conversation going with you? I know we touched on it before, but you want to just touch on that again?
Yeah, I'm going to drop my phone number and email to you because I like connecting with people, and I got no problem, giving out that information to your audience. If you guys want to get in touch with me, please do so. I'm happy to chat with you for a few minutes or respond to an email, point you in the right direction. I did want to acknowledge something you said, Bryce. You paid $30,000 to get educated. So let's take it a step further. There's more than one key. So taking action is one key. You drop $30,000, and that's invest in your education. That's the other thing you need to do with real estate investing. Invest in your education. If you don't know how to do it, learn how to do it. Pay for it. It's worth it. It's a return on investment. It's not an expense, right? And I think that's so important. And there's lots and lots of places around the country where you can get educated. And I'm sure Bryce has his program, and I'm sure it's a phenomenal, real estate investing in mobile home parks is a great investment strategy. And spend money on yourself, because that will facilitate your growth and it'll speed it up too.
Absolutely. Education is super important. I'm an absolute education addict myself. It's totally got me where I am today. Absolutely love it. So thanks a lot. Really, really appreciate you joining us today. Thanks for a lot of different nuggets and sharing your story with us all. Hopefully all of our freedom hackers at home have been inspired and go out there and take action. Really, really appreciate you coming on here and being vulnerable and sharing everything with us today. And for all of our freedom hackers at home, I'm your host, Bryce Robertson. Until next week, live large and live free. G'day, this is Bryce Robertson. I'm your host here at Freedom Hack Radio, and I truly, truly hope that you got a ton of value out of the episode that we just shared with you. And if you did, make sure to subscribe on your YouTube channel. Make sure to subscribe to your favorite podcasting platform. Hit the notification button so you can find out about the next episodes as they come out. Because if you haven't achieved financial time and location freedom, you really need to be dialed in here. So make sure to subscribe and follow us along as you grow on your path to financial, time, and location freedom here at Freedom Hack Radio.